Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. We're going to talk about the markets. Before that, as always, the sponsor plug, Technical Roundup, is brought to you by WooX. The bit that I want to highlight today is actually very useful regardless of where you trade. It's their execution dashboard, and you can pick the assets that are listed there, or at least most of them. You pick your trade size, time period, and compare the execution that you would get on WooX versus the other major venues. I would also bring to your attention that if you click on the fee methodology, it doesn't just compare standard accounts on WooX versus other venues, but with just 1,800 staked Woo, it compares you against the very high VIP tiers elsewhere. So if you want to get a better sense of your cost of trading, again, even if you don't use WooX, just to compare the other exchanges, there's a nice execution dashboard available on the website for you to see the cost of your trading, which I think is really cool. So yeah, go check that out. Again, regardless of where you trade, it's nice to look at. For BTC and ETH, WooX tends to be pretty competitive. For other altcoins as well, some less so than others, but again, in the interest of transparency, go check out the methodology and go do some research for yourself. If you want to try it out, links available in the description below. So hopefully that was efficient enough for you to stay around and watch the video. Click like if you are, and let's get straight into it. So the markets are looking a bit red. I'm going to save you the spiel of going up over every single time frame in great detail, because we've done that on Casual Friday, and we did that on the last Monday markets. We're going to focus a bit more on recent price action. One thing I will say on this monthly time frame, again, the bigger levels are not there between sort of 35 resistance and as early as 24 support. That's not kind of in the purview at the moment. If the monthly time frame is going to be relevant, at the moment, I would just mark out previous month's low as a potential sort of spike point, reversal point, or the next area for the market to poke and prod if we're going to expand slightly beyond the range that we've had. Okay, so that's kind of on your radar, and I think that's the only utility we can draw from the monthly time frame. On the weekly, the market is still within the same range, but it's looking a bit droopy. The range that we highlighted in the last episode of Monday Markets, having abandoned the daily time frame, is the following, with support at 28k-ish. Resistance is the cursed Don cluster at 29.30, and that's kind of where we've been for the past 5-6 weeks. And at the moment, again, it's only the start of the week, so this could turn into a reversal, but we are trading below the range low, having reacted to resistance. And again, if this thing just chooses to break down, your first port of call are going to be the wicks and the lows within the range at 26s. And again, that's where previous month's low becomes useful, because that level also falls into the same price point at around 26, 27. So a poke at the lows. If this is a consolidation that's going to break down bigger picture, then we've got the same levels on the weekly as on the monthly with 24k. But let's take a closer look at this weekly, having removed some of the clutter. So this is the same range. If the weekly closes below it, I think that sets a bearish directional bias, absent a reclaim. The argument would be you had a big impulse, you had distribution at resistance, and then a breakdown in a 5-6 week range. And generally, I like to give those setups room to play out. I don't like to fade breaks from value, especially ones that have been building up for weeks and months, unless they give me a good reason to, such as a reclaim. So this is kind of the theme for the weekly, is to see whether we expand out of this range and in which direction. At the moment, it seems to be favoring the downside, but again, it's only Monday, so God knows what will happen. One thing we need to look at is, what if this is the bottom? Kind of like an early week drive down into the range low before resuming range bound conditions and trading from the low to the mid to the range high. I think the way to get there, and what the market would have to do for a start, is to wick. Now, the way it would have to do that is, in one form or another, eventually reclaim previous week's low, right? So this looks like it's breaking down. What would be the evidence of a failed breakdown? Well, it would be spiking previous week's low and ultimately closing back within the range boundaries. So with that in mind, we can take a look on the daily time frame and see also just how relevant our range boundaries from last week have been. Sort of perfect resistance at every point, and no fake out signals, nothing particularly sort of tricky about that. It is painful to have to abandon the daily time frame in favor of the weekly, but such is the meta, and I think we did that in pretty good time, having done so last Monday. So on its face, this looks a bit breakdowny for my liking. If it's going to reverse, what would need to happen over the course of this week, and the way that would transpire on the daily time frame, would be a failed breakdown. The way that would have to work is a spike below previous week's low and maybe some of these other lows, although that would start getting a bit breakdowny. But in any case, however deep this goes, we have a confluence of previous week's low plus our weekly range low here. just under 28K. And what you'd want to see is, at the very least, daily closes back above the upper boundary. So that would suggest whatever move takes place here is the failed break / wick / deviation, whatever you want to call it, and then you can target back towards the range midpoint and potentially the range high. Okay, so it's one of those where it looks like it's breaking down. No daily close yet, that's pending. No weekly close yet, that's pending. So we have to keep at least an open mind towards the idea that this could be a trap setup. If it is a trap setup, we know what it looks like: spike and close above the relevant boundary. But in the absence of that, if this is just a straight up breakdown, sort of, high, low, lower high, and if it results in a lower low and doesn't reclaim, I think the weekly at that point rolls over, the daily sets a complementary bearish directional bias, and things start to look pretty rough. Again, bigger picture, higher time frame breakdown target is that weekly, monthly 24. In the interim, as per last Monday markets, the first trouble area for shorter term trading would be to see who's hanging out below those lows. Okay, I don't think we need to get any more granular than that in terms of time frames, because they essentially paint the same picture. You can see this weekly range, and the daily range is also a nice 4-hour range. We're poking below it at the moment. If this breakdown fails, it has to get above 28K, and then maybe we get a chance at the midpoint and the range high. But absent a reclaim, it'll just look like a breakdown from quite a long range. If you consider the whole thing, it's a big range. If you consider the recent price action, it would still be a breakdown. Then we have to be open-minded towards lower prices. Okay, that's really all I've got for BTC USD. The levels are good. I think they'll serve us well going into this week, and that's essentially where my focus is. Looks like a breakdown. I'll change my mind if you give me evidence of a failed breakdown. Absent that, the supports are some poke at the lows, which we've built up over time, and higher time frame expansion target is the 24K breakout level. Okay, and if this is going to be a failed breakdown setup, I think it needs to do so in the first half of the week and not spend too long down here. So eyes peeled. As far as ETH goes, unfortunately, it followed much of the anatomy that we discussed in terms of what would make the weekly look crap from last week, and essentially followed through on that promise. As a reminder, we have the weekly range high and now failed breakout level at 1930-ish. And the market pretty much did exactly what we spoke about in terms of stuffing this weekly close, whereby it ended up trading above previous week's high, closing well below it after retesting the level, and then we're red so far on the weekly. So on its face, ETH looks bearish, right? Failed breakout, still acting as resistance, and it's below the level. I will make a mental note similar to BTC, where if you look at it, it looks weak, but you always have to have an open mind for what it would look like if the weakness doesn't follow through. For ETH, for Bitcoin, it's a range low reclaim, or at least not following through. For ETH, my consideration is more a time-based component, where if you look at how long this failed break has been cooking for, this was the breakdown week 1, 2, and this is the third week, still essentially hanging around that level. The failed break setups work best when there's a lot of urgency in the market and things move quickly. So if this spent another week chopping, I'd be very reluctant, or my sort of conviction in the idea of this being a failed break setup would decrease. I want to see urgency. I want to see price moving away from the level. Sort of 2-3 weeks spent here should be plenty enough. And so if it doesn't go this week, I'll be skeptical. But for the time being, purely technically speaking, time component aside, still reacting to resistance and still a failed break. Again, in terms of targets or what have you, if you take the narrow and more recent range, the next weekly level is at 1680. If you take a bigger view of the range, that this is actually from 1K to 2K, essentially, then your midpoint falls closer to 1500 to 1400. Okay, 1500 in the case of the larger range seen here. So still reacting to resistance, hasn't moved away yet. I give it a week or so. If it starts closing the weekly back above, that would be quite choppy, to be honest. But then at that point, the failed break setup becomes untenable. The daily, again, the benefit of doing this on the sort of weekly time frame is that the daily and the lower time frames essentially show the same range, such as the nature of the volatility or lack thereof that we've been in relative to the higher time frame levels. And similar to our BTC analysis, the daily got stuffed essentially. I think on stream we spoke about this level, this highest close, which is exactly what the market responded to, and in doing so also lost the more recent sort of daily pre-breakout cluster here. So a fake out within a fake out, this should really be enough. If this is the weekly failed break, and then this is now the daily failed reclaim, all the time frames are aligned for a failed break setup. And if the setup is going to play out, again, has to be during the course of this week. And any sort of rallies higher are rallies into resistance, as far as I'm concerned, at least until the weekly picture is fixed. That's really all I've got to say there. So similar to BTC, essentially, if we can make a sort of note of this, BTC below range low looks bad. Breakdowny inval would be spike previous week's low plus reclaim 27 D1 at least, as in at least on the daily time frame. So that's BTC. And as far as ETH goes, still cooking, high time frame, failed break. Inval would be weekly close above 1.9-ish, and or failing to follow through in the next week, especially with BTC breaking down. So at face value, stuff looks quite bad. Looks like BTC wants to break down. As always, with any breakdown, we don't know what the market is going to do, so we have to keep an open mind towards that failing. But at face value, that's what it looks like. For ETH, all the failed breakout stuff we talked about is still valid. If it's wrong, it'll be either time-based invalidation, so in the next week or so, it just doesn't move, or price-based invalidation with a weekly time frame rescue. I personally don't like chasing the market on Monday, so that's kind of why I've particularly mentioned these spike invalidation potential type of scenarios. But for what we have at the moment, resistance is resisting, and the ranges look breakdowny. So that's the prevailing theme until proven otherwise. If it starts to reverse, sort of tomorrow, maybe we'll catch it in the newsletter, trletter.com, and Don will certainly speak about it on Wednesday, and maybe we even bring back altcoin Thursdays if this video gets enough likes. But I think this is a fairly accurate summary of my views for the time being. Okay, hopefully that's helpful for BTC and ETH. I'm not sure whether there's any value in doing any lower time frame stuff. Again, a lot of the ranges that we outlined on the weekly and the daily, you see the same thing on the lower time frames, just with more candlesticks. Okay. The other thing I'll mention is alts look very skittish. I mean, BTC down more than ETH is a bit weird, but alts are getting massacred across the board. Pepe is down quite a lot from the highs. This might have another dead cat bounce in it, or some sort of lower high rally, assuming if this wasn't it. But this is quite a clear break in market structure. I mean, these sorts of down moves, people are going to be probably buying it the entire way down if they haven't been already, and that tends to be pretty rough. And on the log chart, this looks like a fairly orderly pullback that sort of shoots through the first support. But if you measure this from high to low, that's a 66% correction. So these moves are massive. As always, watch your leverage, or ideally don't use any on this type of stuff. Other altcoins that look heavy, and again, maybe we'll cover some on Thursday. Oh, well, nice. But from a higher time frame perspective, this is from Casual Friday, our squiggles. You'll recall we talked about LDO for a while, back inside the range, and is sort of puking towards the range low and this sort of, or midpoint level, depending on what you anchor it on for the time being. Another one I don't particularly like the look of is OP. Again, the squiggles from Casual Friday are left here. Looks like we essentially had a high time frame range here. The market broke out of it and was making all-time highs and just got mega distributed on, and now we're back inside the range, and the sort of midpoint and range low are some way away. So kind of sort of failed breakouts in what should be trending strong altcoins, which generally isn't a good look. Arbitrum as well, the only structure that it did have, the sort of pre-pump range, listing, went sideways for a while, and then, similar to OP, when it breaks out into new all-time highs, it just gets stuffed. At the moment, looks like it's breaking down as well. Maybe there's a nice reclaim long there somewhere towards mid and high. But if you look at the markets more broadly, these do look like even the strong performers are breaking down for the time being. So always a trap of always a chance of an early week trap thing, but for the time being, you've got to take the market for what it is. If it wants to be strong, it'll show us, and then the reclaim setups become available, but these just look pretty weak. And I'm not even looking at the non-shiny stuff or just altcoins generally. Those are supposed to be the strong ones, and they look kind of rough. That's really all I've got. I'm not going to hold too much of your time. If we can get it done under 15 minutes, I think that's a good thing. Hopefully this update was helpful. Again, if you're busy getting chopped up on this and paying a bunch of fees, go look at the execution dashboard from WooX, the sponsor of the show, to compare your trading your costs of doing business across venues. Even if you don't want to sign up, that's fine. It's still a cool tool to look at. If you don't want to support the show, links available in the description. I think if you deposit over $100, you get 2 weeks of zero fee trading without having to stake any Woo, which is cool. But that's about the most shilling I can do. Hopefully this is helpful. If the market moves this quickly on Monday, we might have to have a midweek video update, or at least I'd be tempted to do so. If that's something you want to see, leave a comment, leave a like, do all the normal algo engagement stuff, and I am going to sign off before the 15-minute mark. Thank you and take care.